Alrighty, so trade recap from the other day on Friday. It unfortunately was a full 1R loss, but digging into technicals, which I'll do so in a second, I do like the position. I don't think it's the greatest, but I did I did take it even though it had its negative factors to it, and I do believe in hindsight it's a trade that probably shouldn't have been taken. However, it does meet the criteria of the trade plan, and it was a valid setup. It just wasn't very high probability, and it had a couple of negative confluence factors against it. So, starting off on the daily time frame up on the top left, we have this nice extension up into spot 85 500. So you got the nice round square number, your nice rally up into it. You have this wick fill here, which I really liked, and then we had the bearish engulfing in those three pin topping out nature up the top. So to me, the daily time frame was just screaming that it wants to come back down to a more discounted market. Now, just on that alone gives me a solid template and a foundation to build on top of as a directional prediction, which I really liked. And even though I said at the start of the video it's probably not a trade I should have taken, I still stand by that. However, the confluence of the position comes from the strongest layer, which is the directional prediction. So building a position on a strong directional prediction, you can be a little bit looser and more lenient with the 4 hourly and the 1 hourly time frames. Whereas on the flip side, if you build the picture from the 4 hour and the 1 hour, but the daily is like lacking a little bit, it's like building a foundation on sand versus cement. So when those higher time frames are present and are in our favor, we can lean into that a lot more. And that's exactly what I've done in this position. Even though in hindsight, probably not one that I should have taken. I put maybe a little bit too much influence on the high time frames. But spot 85, nice round number, your nice extension up into it, three pin topping out, deceleration, and the bearish engulfing. This weekly level was just mapped on a weekly high from a few months ago, and just pulled that across. But it's not it lines up perfectly. But I'm also playing that extension and looking for that to retrace down lower. Now, the first and main problem that comes with the position is this 4 hourly time frame. I like that we've got room to run to the 4 hour 50 EMA. That's good for risk to reward perspective. But what I really don't like is that we've got these recent highs over here. The price has already come down and rejected before I even got my entry. So price broke down on that hourly time frame, retraced back up after rejecting these highs. So that's negative confluence factor number one. Moving down to the hourly time frame, we had the wave 1 breakdown. We had the wave 2 pullback into the 1 hour 50 EMA. So that's validating the setup with a downside target of the 4 hour 50 EMA. But unfortunately, the second negative confluence factor on the position is that the price is just super choppy and it does not look clean at all. Structurally, it's sound, but the price action is just disgusting with wicks everywhere. It's super choppy. I'm really not a fan. So they're the two primary negative confluence factors on the position that I don't like. And like I said earlier, I think I put a lot more weight into that daily time frame for that directional prediction than maybe I should have. I think it's a decent directional prediction, but the 4 hourly is negative, and it's just a really choppy looking chart right now here on that hourly time frame. So not really what I'm looking for, but again, structurally sound. So we had the wave 2 pullback into the 1 hour 50 EMA, which is looking good. We had a few hours of deceleration, which I really liked. And then I liked that we got these candle closures back below that 1 hour 50 EMA there. So what that entailed on the 5 minute time frame when looking for entry was we had this ascending trend line. We had 0.1, 0.2, and then we got the closures below it. So that was me waiting for the last possible moment that I could before I expected price to come down lower, whilst waiting for that 4 hour candlestick to close before the entry. So I entered just after the closure of the 4 hour candle here. So 5 minute 50 EMA breakdown, stops behind 0.618, downside target at the 4-hour 50 EMA. Looks like about a 2.5R on offer. Unfortunately, it just went vertical against me, tagged me out for a full loss. There's nothing that I could have done differently that would have been in line with the trade plan. So no errors made. It's just unfortunately that this one just didn't go in my favor. And I think a lot of that comes down to this this region here. Price is literally forming a rejection on these recent highs already, and then I'm trading back into it, and I think that's just asking for trouble. So that's why I think that 4-hour time frame should have been the filter here to say, like, yeah, no, this is not it. This is not it. If the 4-hour was with me, and it was still messy on the 1-hour time frame here, but the 4-hour was with me, fantastic. But it's not. The 4 hours against me, and the 1 hour's shit. So that's why I think it's just a pretty low quality position. However, it is what it is. Lesson learned. On to the next. Full loss. And I'll see you in the next one.